Progress.
Welcome to our town board work session. Today is August 1st. It's 5:23, and we have with us our auditors, O'Connor Davies, and they're going to give us a report on the town's financial health.
Could I just briefly say that Councilmember Sheehan is attending via Zoom in compliance with Greenberg Town Code and state law.
Okay, that's great.
Okay, thank you all. I am not Nick DeSantis, as it says on the thing. I am Scott Owing. I am pinch hitting for Nick DeSantis. He had a grandfather emergency to attend to help out his grandkids. So I'm pinch hitting for him. And I'm joined here tonight by Jeff Shaver, who was the engagement partner who ran this year's audit. You have in front of you two documents. You have the very... You have the very large annual comprehensive financial report document. That's 175 pages. And thankfully, Jeff also provided a PowerPoint that is about 15 pages, and that's what we're going to take you through, which summarizes some of the key elements in the full annual comprehensive financial report. So the brief agenda for this discussion starts on page 2 of the PowerPoint. I'm going to take you through an overview of what we're required to communicate to you as your external auditor. And then Jeff is going to take you through the majority of the presentation, taking you through primarily the fund balance information for your general fund, other information about the general fund, where your revenues and expenditures went to and from this year. And then he'll also talk to you about your town outside the villages fund, so that takes care of all the areas outside of the incorporated villages within the town. He'll go over the proprietary funds with you and explain what those are, and then he's going to go over some of your long-term debt and debt service costs. So starting on page 3, what your responsibilities are as relates to the audit that has been completed and has been submitted to the Government Finance Officers Association this year. The town is one of our few clients that submits their financial statement for an award, a national award each year. That goes to the Government Finance Officers Association in Chicago, and somebody out there or around the country grades the report, makes sure it complies with all applicable requirements, and then you get like an award for excellence in financial reporting. And the town has received that award for a very, very long time. And it's extra effort on our part, on finance part every year to get that, but it is a recognition that you are conforming with the highest standards of financial reporting. So what your responsibilities as this group is for the town board, it's your job to make sure that the town is selecting appropriate accounting policies, that we're following all the rules, and of course we make sure you're doing that as well. You have to follow and make sure that these financial statements are prepared in accordance with what's known as generally accepted accounting principles, or GAAP. They have been. You are responsible for establishing and maintaining internal control over what appears in this report, because if the controls and the systems that generate the numbers are no good, then the numbers are no good. So you're responsible for that. Obviously responsible for complying with various financial reporting laws, regulations, especially with your federal aid money that you receive here. And we have to do tests and make sure you're in compliance with that. You do have to provide us all financial records and any information related to the audit that we request. And we did receive all that information. And of course, as the board, setting the tone at the top for the whole town. Our responsibility for this audit is what we've delivered to the town and are talking about tonight. Even though we prepare this report, the big report, on behalf of the town, the part that really belongs to us is the independent auditor's report, which is shortly after the table of contents. It basically says that we're providing an opinion on the financial statements. We've issued what's known as an unmodified opinion or a clean opinion, meaning we believe these financials fairly present what happened in the town for its 22 year. Jeff's also provided you with a communications letter on any deficiencies that we might have found. We are also required to report to you if we came across any fraud or illegal acts doing the audit, and we're happy to say that we did not come across any of those. We did not encounter any difficulties, during the audit. Controller's office, worked with us, and no difficulties there. Any adjustments that we might have found have been reflected in these financial statements recorded on the town's books, so there's nothing uncorrected that's left. And obviously, during the audit, we would report to you if we had any disagreements, here, so we did not. So with that brief overview, or maybe not so brief, Jeff will now take you through the actual numbers for December 31st, 22. On each of his pages that he has summarized here, he lists the actual page number in the big report where that information can be found as well.
Thanks, Scott. So starting on page 5, this is a general fund. This is your general fund balance. 4-year history here, and also the left column is just the change between 2022 and 2021. So you can see the total fund balance increased from $23.5 million at the end of 2021 to $27.5 million at the end of 2022. You'll see the 5 different categories here that the fund balance is categorized into. You have the non-spendable fund balance, which means the fund balance is not in spendable form. You can't spend that again, and that's $232,000. Restricted is set aside for certain items in accordance with New York State law, so it can only be used for those items, and that's the employee benefit accrued liability at $428,000. That's essentially accrued vacation and sick time for your employees. You have a commitment, or what essentially would be a board earmark or board designation for tax certiorari claims at $200,000. And you also have assigned fund balance totaling $11.4 million. Within that assigned category are any amounts that the board uses to balance the subsequent year's budget. So if whatever number was put into the 23 budget to balance the budget would be showed as assigned fund balance at December 31st, 2022. That number was $3.8 million. There's also $7.4 million assigned for the courthouse. That was done via a town board resolution, and so that's carving out a piece of that fund balance to be used for those costs in the future. The residual fund balance, or what we refer to as the unassigned fund balance, or not earmarked or encumbered in any way, available for use at the discretion of the board, $15.2 million, which is up from about $12.6 million in 2021. And you can see it has increased, with the exception of 2020, which was obviously an unusual year. It has increased over the 4 years from 7.5 up to 15, which is certainly a positive note for the town. I'll take you through that on the next slide if I could, but just the last note here is that $15.2 million is about 68% of the 23 budget, which is it's a very good number. It's a healthy number. It shows that the town's in good financial condition.
Let me ask a question. Every year, we always in the budget put in money for fund balance. We're taking money out of the fund balance. Are we taking, and every year it seems like our fund balance is better than we anticipated. Is the budget sort of like incorrect where I'm basically, spending, deleting too much from the fund balance, or is the practice that we're using fiscally prudent?
The practice that you've been using is proven to be fiscally prudent. If it were not, that unassigned fund balance would be going down, and you'd be eating away at that. The issue would arise when you're not generating that much surplus in your budget, or less surplus in your budget than the amount you've used to balance the budget, which would cause your fund balance to decrease instead of increase. So if you're able to generate budgetary surplus greater than the amount you put in your budget, you're going to be increasing your fund balance and moving in the right direction.
How much of this money in the surplus could be attributable to family, the ARPA money, for instance?
Approximately zero.
Approximately.
Yeah, zero. Because, and I'll take you through that, all the federal money was used in the enterprise fund or the water fund. So it's kind of not in the general fund at all.
So it's not in the.
So it's
general fund.
not in here at all.
Okay.
But if you want to, there's
Right, I'd
some,
forgotten that.
I could take you through some of the details to answer some, how it came about. Page 6 is the budget to actual schedule for the general fund. And this shows your budget as adopted by the board, the final budget with any, transfers or amendments that were made during the year. And then the third column is your actual. And then the fourth column is the variance between the final budget and your actual. You can see the first line, you anticipated collecting 19.3 million in revenues. Actual collections, 21.8 million. So you collected more than you anticipated by 2.5 million. I have some more details on the next slide on that. On the expenditure side of the budget or appropriations, you anticipated spending about 27.4 million, and you only spent 15.7, or about 12 million less than that adopted budget. Again, I have some more information on the following slides. The bulk of that is related to the courthouse and how you budgeted that courthouse and haven't spent it. The budget anticipated utilizing $10.2 million in fund balance. However, you generated budgetary surplus of 14.2. So you did better than your budget by 14.2. Anticipated using 10.2. The difference becomes your increase in fund balance, $4 million. So that's your $4 million and how you, at a high level, how you got there. And then you can see the ending fund balance, as I mentioned before, 27.5. Page 7 of the PowerPoint, just a few more details on the revenue portion of the general fund's budget. Most of your revenues are quite close to how you budgeted them, no significant variances, with the exception of state aid. That's mostly the mortgage tax. The mortgage tax gets budgeted within state aid under the New York State Chart of Accounts, and the real estate market was very strong in 2022, and you budgeted that number conservatively, and you ended up collecting $2 million more than you anticipated. So that's certainly part of the reason why the fund balance goes up.
May not see that this year, obviously as interest rates have gone up, effects on the housing market and people buying or not selling their homes because they're in, low interest mortgages on their homes, and why would they sell and take out a 6-7%? So we'll probably all see, not just here, but everywhere, a sharp drop in mortgage tax. Certainly, mortgage tax is also generated when folks refinance their mortgages. Obviously, there's not going to really be any refinancings now because rates are
Higher
are
rates,
higher. So, that's a number to pay attention to for '23.
There's also some post-COVID affecting them too.
Correct.
People
Yeah, the pent up.
leave the city and move to
Correct.
suburbs.
Correct.
And the sales tax figure in there?
Sales tax is in the town outside.
Right.
It's not in
So
this one.
I'll get to that in a few slides, but that was also positive.
Okay.
Page 8 is your general fund expenditures compared to the budget, similar presentation. In the general government support line, you see the variance of $10.6 million. In 2022, I mentioned it before, the courthouse was budgeted as an appropriation. It was also part of the appropriation of fund balance. So the budget, the way the budget was crafted, it was anticipated taking down fund balance to use on the courthouse. And it was done that way, at least for a number of years, as long as I've been coming here as the auditor. The town changed that policy by just assigning the fund balance. That way you won't have to put it in your budget every year, and you won't have to appropriate the fund balance. It would have to be taken down through a town board resolution and used in that manner. But by doing that, you avoid these large variances between budget and actual. So in the future, you shouldn't see such a large variance there. Okay, it should be a little closer to the actual. That was 7.7 million. In addition, there was 1.6 million related to uncollected taxes in a favorable manner, because the tax collections were positive or favorable in 2022, meaning your taxes receivable went down. So you were able to collect some of your back taxes. When you do that, that's a favorable impact to your budget.
Okay, and I would imagine we still, well, that's for '22, so for '23, we should realize some more back taxes, right? Okay.
So that was 1.6 million of the variance there.
Joe, do you think, in terms of back taxes as a follow-up to Owen's, comments, do you think the judges are going to rule on, on the petition that we filed this year?
That will take some time. I would suggest maybe an additional letter going out. That's a quicker way to receive those back taxes. But we will continue to follow up on that. And I think there may be other measures besides the foreclosure process itself to try to assume some of those
So would
back
you think I
taxes.
should do another letter like now? We did.
I would recommend it, and if you were to speak to the receiver of taxes also, to see if she agrees that it's a good time to get that letter out, I think it's pretty efficient.
Okay.
Just with regard to the taxes, keep in mind, your general fund budget's about $30 million. However, the general fund's responsible for collections and remittances of all the municipalities within the town's taxes, well over $500 million. So you don't see that when you look at the budget, but it really is a very significant matter that the town has to contend with. So when we say uncollected taxes, it's not just the town taxes, it's all the schools, the counties, it's everybody within the town.
Right.
I believe it's closer to 600 million at this point.
520, right?
Yeah.
Yeah,
So
it's on
it-
the full report on page 30.
So it's a significant dollar amount the town has to collect, and they're responsible, you're responsible for making everybody else whole, making sure they have all their taxes. It is a significant
So
burden.
potentially, if we don't collect, we still have to pay out, so that becomes a problem.
Yes.
Yeah, but we do get
Yes.
the penalties and interest, so.
Yes.
It's not that, in terms of the back, I'm just asking about the back taxes again. From your clients, are we sort of within the range in terms of the collection process, or are other communities doing much better or worse or whatever?
Can you say?
I would not know off the top of my head. I mean, all the towns, and, Westchester is unique in New York State. It's the only county in the state of New York that I'm aware of. I don't know about New York City, but everybody else, where the towns are responsible for making the other governments whole. In the other counties, again, outside of New York City, it's the county that has to make the towns and cities and villages, make them whole. Only in Westchester, the county here is made whole, and then all the towns are left kind of holding the bag for uncollected taxes, and the big cities in Westchester. So it's really hard to say. Everybody, of course, has uncollected, taxes. It really depends on how aggressive, they are being and trying to work with people, create payment plans, whatever it is that, they can get the money in, because it's not revenue for you until you collect it.
Right.
So, that's really the big issue. In this case, because your collections improved this year, the way it's accounted for in the books, you ended up, as Jeff said, with this positive 1.6 million compared to what was anticipated in the budget. So that was very good.
And I believe this year we received at least one very large payment so far.
Right.
So I think the next year coming up, it will be similar or hopefully even higher.
Okay.
When you say we're in good shape, are you taking into consideration that a considerable amount of the revenue are one-shots from building permits from companies that are not going to be able to sustain the amount of construction that they're doing?
Is that what you're
In
referring
other
to?
words, are you looking at we're in good shape for this year, but not pulling out the one-shots to make sure that we're in good shape going forward without those one-shots?
I'll just say the building permits, I believe, are also in the Town Outside Villages Fund, so also not part of this general fund, first point. And also, that's true that there were some very significant building permits that came in, but the thing that I would point to is that you didn't budget those one-shot revenues. Because when you budget a one-shot revenue, the next year you have a hole to fill automatically. So it's kind of a bad practice to do that. And and you'll see through the rest of the PowerPoint, you really didn't budget any of those one-shots. If you had budgeted some of those one-shots, I would say, well, okay, you did okay this year, but exactly kind of to your point, you've created a hole in the future. I don't see any instances of that in your budget. So, does that help answer your question?
Right, except I do know that as part of the budget, we get numbers from the building department as to what they anticipate in building permit fees. That happens every year. And you're saying that those building permit fees, other than the routine ones, are not included in our budgets?
Well, I think there was some very significant ones in 2022, several $1 million.
Right.
Those were not fully factored into the budget.
So we did budget for the increased building permits within the year.
Right.
However, we got that plus some. So
We
that's
were
why,
conservative.
But that's.
but it's not always going to be there. But we did
Right.
we did anticipate getting an increase in the building permit fees.
Right, but we didn't anticipate, right, but we were conservative in the estimations.
But that kind of begs the question. And, whether it was conservative or not, the fact is that it
Exactly.
was budgeted in, and the
But
fact
not
is that
as
we
high.
the fact is that we did get additional revenue absent that. But that was
Yes.
kind of factored in to Francis's question, right?
Exactly. And what would be the condition if we didn't have those one-shots going forward into next year?
Well,
We would have to balance out the budget.
use fund balance to balance the
Somewhere
budget,
else.
more fund balance to balance it, or cut expenditures somewhere in some other part of the budget.
Right, which is my point, is that in subsequent years, now next year looks good as well for building permit fees, but that's not sustainable, and I'm concerned about the crash that occurs when the one-shots are not there. So,
It's a fair point, and that's why you build some fund balance, and that's why the fund balance numbers that you have are important, because when those building permits or whatever the economically sensitive revenues are, start to trickle down when maybe the economy's not doing so well, you'll have to go and dip into your fund balance a little bit.
When we had the COVID, the pandemic, we did that, and we were able to weather the storm, nicely without layoffs and without, tax increases. I mean, we basically.
But that was because we had the one-shots.
Right, the point,
That was
Well,
due to
we've-
because we were
we've
able
had-
to utilize the one-shots to
But I'm saying
avoid
the
that.
past, like, dozen years or whatever, we've had, times where it's been good and times not as good, and we've been able to, weather the storm through, dealing with the budget.
taking money from the fund balance while maintaining the minimum that we should have as a fund balance, in other words.
Yeah.
Right? So with the one-shots, we've added the surplus into the fund balance, so that acts as an extra cushion, is what you're saying?
Yes. But we
In
do,
addition to what we had even in the past.
but we always make sure that we stay within our fund balance policy, which has a ceiling and a floor,
Right.
because we don't want to tax too much as part of our fund balance policy.
Right. So we didn't exceed that in this? And we didn't have, and did we have surplus outside of what we're putting into the fund balance?
Well,
to-
we did
for the ceiling?
bring in more than we had anticipated, yes. So,
And where well, I guess you'll tell us how those monies are allocated, won't you? Okay.
I'll let Jeff continue.
There's also another thing about one-shots, because not all one-shots are created equal. So, we also have places where they know they're getting a one-shot, but they also use it for like a one-time purpose. So they might, be getting some kind of grant for, $1 million, and they're saying, well, we're going to repave the roads, or build this thing, or buy a vehicle, so that's a one-time one-shot revenue for a one-shot purpose. So they're not always, a bad thing, but if they're just used for regular operating expenses, salaries, benefits, and stuff, then yes, when that one shot goes away, you have to fill the hole the other way by either cutting expenses to bring them back in line with the, the revenues, or finding other revenue sources to offset that.
Okay. But in this sense, we've had a bit of a run, although some expenses, and because we had ARPA money, we had other, so that helped us weather the storm too. And now this is a continuation of having, like figuring ARPA being one shot and this being the subsequent one shot. And then we have to think about that as we plan out next year's budget.
And we also have other one-shots coming up.
Yeah.
So, the thing is that.
Well, that
future of the
extended a
town-
year or two.
Right, but the
Right.
future of the town, it's not that, it looks like economic development is ending. It looks like there's a lot of potential opportunities for the town, going forward.
Yeah, I don't think we're ever going to see something like Regeneron in the future, once they've built out their site, quite frankly. It's just a phenomenal site. Now, there may be some small, unless there are parcels that I don't know about in the unincorporated area of the town of Greenberg, but I don't think that's the case. So my concern is that if you're using the one-shots, as you say, for other than specific project, and you're using it instead to artificially keep the tax rate down, when those one-shots go away, there's a reckoning. I'm just mindful that in the past, there's been a 0% increase, a 0% increase, a 0% increase, and then a 24% increase. And we never want to go back to those days. And so you're the auditors, if you're saying that we're in good shape with the way we're using fund balance and the one-shots, then that's your position.
So I just want to move on to the Town Outside Villages Fund on page 9. Also a positive year for the Town Outside Villages Fund. Revenues were greater than anticipated, $4.5 million. Expenditures were less than anticipated, $5.4 million, giving you approximately $10 million budgetary surplus. So you did beat your Town Outside Villages budget by about $10 million. Keep in mind, you anticipated utilizing $3.7 million of fund balance. So again, the difference or the delta is your actual increase in fund balance, and that was $6.2 million. The beginning of the year fund balance was $28.7 million. It increased to $34.9 million. It was certainly a positive year for the Town Outside Villages Fund. And some of the things we've already kind of discussed, you can see on page 10. More details on the Town Outside Villages revenue side of the budget. Non-property taxes, $1,392,000 greater than the budget. That's your sales tax distribution from the county. That was about $1.2 million greater than your budget. And the hotel tax was about $350,000 greater than the
What
budget.
percentage of that does that county money represent?
Of,
Well, I guess
to you or to the county?
both, if you have that.
I believe overall county sales tax was up about 10% year over year from 21 to 22. So obviously, there's a formula where the county shares the sales
Right.
tax with all the schools and municipalities.
Right.
So it's proportional.
Right.
So we were just, we're presenting to the county very shortly, and it's basically, it's a crazy formula, but basically they share about 25% of what they take in with all the schools and
Right, so
municipalities.
it's 20% to the municipality from the 1%
Right,
increase.
there's a whole,
And then
there's
there's
different.
another, yeah.
Yeah, it's,
Yeah, I was just
but
curious.
overall, like a blended, amount, like when we look at the county in total and we see their gross sales tax collections and their gross distributions to the municipalities and schools, it is approximately 24%. So their number is up significantly, it's about 10% higher than the previous year. So therefore, that 24% will be 10% higher for everybody, yeah.
Okay.
Is the sales tax and mortgage tax and hotel tax, what is the prognosis for 2023? Do you have any idea?
I don't do prognostications. I don't know. We're always looking backwards, so we're always looking at 22. But to this point, it's been strong. But you see the macroeconomic effects of the higher interest rates, and what that's beginning to take effect on the housing market, and so that would impact that. It'll impact state monies coming in and so forth.
Just a little bit on the magnitude to the town, the budget for the sales tax was 11 million. You collected 12.2 million, so 1.2 million greater than anticipated, or about 10%.
Do you remember how much we budgeted for 2023?
I think we just upped it just a little bit.
So there's also
And how much was the hotel tax total that we got?
about 1.1 million,
And that should be
Up-
going up.
up from 700,000 in 2021.
Right, and that should go up this year, I think, also. It should be higher, it seems, right?
Let's see. I mean, obviously, coming out of COVID, and obviously as hotel occupancy begins to return to, pre-COVID levels, that's, what we're seeing in the places that do have a hotel tax, that, this year was better certainly than
Yeah.
20 and 21.
And then the Greenberg Hotel shut down, correct? I know there are a number of hotels like Arrowwood and the one over in New Rochelle, whatever that one was. Yeah.
So,
That's fairly close to the pre-COVID numbers. It was always, eventually, once it kicked in for the full years, it was over $1 million. So we're pretty close to what it used to be.
The departmental income, which encompasses all the various fees that the various town departments collect, was 1.4 million greater than the budget. The largest of that was police fees at 1.1 million. Licenses and permits, 2.2 million greater than the budget, and that's where the building permits are housed. So the building permits by themselves were 1.7 million more than the budget, and that was, I think, mostly the Regeneron.
how much was the building permit fees total?
$8.6 million, up from just under 4 million. So it was a really significant increase from 21 to 22. I can see here now that you did increase the budget, because you budgeted 6.9, greater than you had collected in 2021, but not to the full extent that you collected. So it really was, on that line item, a tremendous increase, and a tremendous increase over the budget. So I wanted to point out, in the federal aid, the town outside villages did budget to utilize some ARPA funds there, but none of it ended up being recognized in the town outside villages fund. So that's actually a shortfall in the budget. However, some FEMA aid did come in, which wasn't budgeted for, and that kind of like
Offset
reversed it.
some of it.
It offset. So we ended up with a shortfall in federal aid of $1.1 million here. All said and done, you did beat the budget on the revenue side by about $4.5 million. So those are kind of the highlights there. On page 11, you can see some of the expenditure categories, really sprinkled throughout the budget. You did a good job of keeping the cost less than you anticipated. So those aggregated to about 5.4 million, in the town outside villages fund. And once again, 6.2 million was the net impact, bringing you to 35 million. That residual fund balance that I talked about, it's about 17% of your budget. So not as high as a percentage as the general fund, but still, what I would consider a significant, a healthy number.
So when I'm looking at these numbers, they're for 2022, but have all the committed monies been paid out and factored into the revenue? Is that from '22? Is that
not
The
sure
way
I
you're looking at
understand
me,
the
you're not
question.
understanding. And I'm not understanding me either.
I thought I understood you.
Okay, Ken, can you
In other
translate?
words, are funds that are earmarked for certain expenditures, were those expenditures actually expended, or is that money still in the budget to be spent?
And not reflected.
The variance column shows you what we thought, it's the difference between what we thought we were going to spend in the budget versus what we actually spent.
But what we actually spent is everything that was committed
Right.
to
That's what
spend?
she's asking.
Not everything, because we have positive variances. So we didn't spend everything we said we were going to spend.
I know, but did we commit to monies to be spent that we haven't spent yet that still that still come due?
Right. Are we overcommitted?
I
based upon
don't
the
believe
money
so,
that we have?
no.
Okay.
Because
See,
these numbers-
actuarial types don't know what I'm talking about.
So these numbers, what they take into account is anything that is owed as of December 31st, 2022.
Well, that's basically what I was
Yeah,
asking.
like
So
accounts
if
So
payable.
it does
Exactly.
take
Yes.
into that, yeah.
Yes.
Yeah, so like if there's a bill that comes in, somebody did service in December, they sent the invoice in January for $10,000, they'll pick that up as a December expense and make it accounts payable. So that is factored into 22.
Yeah. So that's my question.
And they go out a
And yes.
couple of months. Yeah. And they go out, until they close, they go out a couple of months and just make sure that everything that, maybe comes in 23 but really relates to 22 is brought
Cut
back
off
to
in
22.
February.
Yeah.
Okay.
We say you got till February to get in your 2022 expenses. After
Oh,
that,
okay.
you got to use 2023.
Right.
Okay,
Right.
but fair enough. Thank you.
So shifting gears somewhat to the proprietary funds of the town on page 12, there's three different proprietary funds, two internal service funds, which are just, the revenue source of those funds are just charges to other funds, so it's kind of like internal accounting. One is the Intragovernmental Services Fund, and the other is the Risk Retention Fund, and that's where your liability claims would be paid out of, and those sorts of things. They're meant to be, break even, so to speak. They're not, they're meant to allocate costs and not keep excess, but just kind of be there as an accounting mechanism and break even.
Can we get a breakdown of those intergovernmental funds allocations? I guess that's for you, Roberta, that's outside of, it's all in here?
I'm
In summary
suggesting that
form.
it could be.
I can give you a trial balance that will show you
No.
by,
By line item by line item?
yes, if that's what you're asking for. Okay.
Of those expenditures? Okay, great, thanks.
So I guess those funds are basically at a break even. There's not any extra in those funds to speak of. Then there's the third is the water fund, and after accounting for the long-term liabilities of the water fund,
Where's
there's
that?
bottom right-hand side, that $26.7 million.
Oh, I'm looking at page 13.
This is
now.
meant to be a conversion because the water fund isn't accounted for the same way as the general fund. All the liabilities are, long-term liabilities are in there. It's a full accrual fund, like a for-profit entity would be accounted for. So we're kind of doing a conversion here to make it more comparable to the general fund and the town outside villages fund. So when we do that comparison, we see that the water fund has fund balance of about $26.7 million. And that's, keep in mind, the water fund always has receivables outstanding because, you don't collect as soon as you bill for the water. It takes some time. So you're always billing and you're always, collecting. So you have to cover some of those receivables and other things like that. So that's just what's left in the water fund as of December 31st, 2022.
And ultimately, this fund does need some money because obviously there would be, future infrastructure upgrades and needs, to
Yeah, they've
keep
got
the
a
water
plan
system
for all
going.
of that.
Right.
Now, where does this
Right.
fall within the parameters of floor and ceiling for the water fund?
The water fund is done separately because all of the revenues for the water fund, we collect to cover all the expenses of the water fund. So it has nothing to do with the fund balance
Well,
policy.
no, I understand that. I was just wondering if it has a floor and
They-
a ceiling for that as
That
separately.
does not, no, it's not a
Okay.
separate one, no. But they do have outside analysts that look at this on a regular basis, and they monitor it to see what the rates need to be. So there's a whole committee that looks into it.
That we talked to on occasions, yeah,
And,
yeah.
and anyone, I always invite people to the antenna board meetings, but if you want to go to the water board meeting, it has the same invitation. They do a very detailed analysis, and as a matter of fact, the lag time between the expenses and the receivables is going to decrease because they're going to be moving to monthly billing. It's a way of also increasing awareness among the public as to, do you have a leak, for example, or, you don't want to wait 3 months to know that, even though we have systems in place now that will warn you if you sign up for it, if you have a leak. It'll contact you and say there's something wrong, you're having unusual usage. But they're not part of they're an enterprise fund, and therefore they're not part of our fund balance policy.
Okay, thanks.
So shifting over to the long-term liabilities on page 13. Now, up till now, we've been talking about fund balance mostly, like that's the money you have in the bank set aside for future expenses. These are the liabilities that are not accounted for in those funds, so they exist. It's just not part of, it doesn't reduce your fund balance, separate and distinct from the fund balance amount, exist these long-term liabilities. There's bonds payable related to the governmental funds of about $53.5 million. Nothing issued in 2022, and $7 million was paid down. You also have some other long-term liabilities, claims payable. That's like judgments and claims, those sorts of things. Compensated absences, vacation and sick time for your employees. Landfill closure costs, $4 million. And the significant number on the page is the other post-employment benefit liability at $266 million. That's the actuarially determined value of the health insurance for retirees. So that amount is not funded. It's on a pay-as-you-go basis, so when those benefits come due, the health insurance benefits are due for the retirees, you budget for those payments and you make those payments. So that's how it works in New York State across all municipalities, because there's no legal way to fund the liability. And then likewise, on page 14, you'll see the same chart for your water fund or your business type activities. And you have the bonded debt, of course, at about $33.5 million outstanding. Some compensated absences, $169,000, and the other post-employment benefit liability allocated to the water fund at $11.5 million. So those are some of the liabilities of your water fund specifically. And then finally, to recap, is just a summary of the bonded debt outstanding on page 15. You'll see total between the enterprise and the governmental funds, $86.9 million of bonded debt. And those are just for your reference to all the issues that are outstanding and when they come due and the various interest rates you have to pay. And finally, also, on a year-by-year basis, how much those payments will be to the town. In '23, that number would be about $10.8 million of debt due to be paid. And that number does trail down a little bit in '24, '25, '26. And in '27, it ultimately is dropping down to about 8.2. That doesn't account for any new debt that might come on by then. So that's just as of this date. That's really all we had for our prepared remarks. I'd like to just thank the Comptroller's Office, for making it a clean audit. And we do come in, we're prodding and prying and asking a lot of questions. And, everything was pretty well in order and, done well. We did have a federal single audit for the first time in a long time here because you spent some of that ARPA money. So when you spend more than 750,000 of federal dollars in a given year, it triggers a compliance audit. ARPA was one big piece, and also the FEMA aid was a second big piece, so we had to look at those two programs in detail. We're finalizing that with the Federal Audit Clearinghouse. I think Roberta probably got emails today about it.
Yes, I did.
Yeah, so we're in the process of finalizing that. Everything checked out okay from a compliance point of view, so that was all good there.
I had just one question. I asked all the department heads to give us, a list of like variances for 2023, the first 6 months. Many of the department heads responded, today. The question that I have is that sometimes it's difficult during the year, we don't really know where we are, say, at the middle of the year or, different points in the year, and then it makes it harder to, to project, in the past, I would say, oh, the budget is really, difficult. We're going to be, there's going to be all these potential layoffs and cuts, and then, we have a tax cut, and I'm sort of wondering, would you have any thoughts on what we could do, what the board could do, so we could have a better estimates during the year as to, where we are, our projections, accurate, should we tighten up or, more than we would normally do? I'm just wondering from a budget practice, or are we basically just doing whatever we should be doing?
I might want to defer to you as, because I don't know what you provide, monthly, quarterly,
So our budget is put in, and I've said this, is put in on a yearly basis. So not all the departments get us in, all the information on a timely basis. So really, number one, it's a lag in getting the information into the system. Number two, you're looking at a budget for a whole entire year versus part of the year. So it's very difficult
Well, that's
to
what,
match
that's what
the
I'm,
two up.
that's what I'm sort of, I remember when you mentioned that last week, that's a valid point, and I'm just sort of wondering if there's anything that, the board, is there information that the board could have that we don't have right now that would enable us not to have, surprises, because we've been lucky the past 10 years where the surprises have been positive, but it could be negative 10 years from now. And I'm just,
Can I make, to follow up on what you're saying, Paul, does it make sense to take a look at historically and work up some kind of average historically and maybe absent out the COVID years because that was such an unusual thing, but have that inform us? Does that make sense? Or is that too
But-
simplistic?
That's a little simplistic because when we do,
couldn't get it.
when we do year end, there are a whole bunch of costs that we need to look into to make sure that they're all recorded properly. There's a whole bunch of analysis that needs to be done to make sure that we're in the right place. And quite honestly, we don't have the manpower to be able to do to do it every month.
I'm not even suggesting every month, I'm just saying, go over a span of 10, 15, 20 years, look at the prevailing factors in a simplistic way. We can't look into our crystal ball perfectly, but we can look at past history. Maybe that would be helpful in answering supervisors' concerns. I don't know. That's what I'm saying, is that
I'm just
So,
saying, what,
We've got
I'm not.
the 10 years in here, correct?
yeah, what things you can
Operating, this is the operating indicators.
I mean, if you start like on pages 148 and 149 of the big book, it gives you a 10-year history of fund balance for the general fund, and then all the other funds, combined on that page. And then pages 150 and 51 give you revenues and expenditures for a 10-year period. So you could see like real property taxes, in 2013 were 63 million, and in 2022, they're 73 million. So it's up 10 million in 10 years. And you could see like the trend there, and certain, these these are main categories. They're not, specific individual lines.
The question that I had is it's basically, again, I think you've done a really good job in terms of preparing the budgets, and, I feel that, everybody is pleased that, we've had tax cuts or zero taxes for 4 years so far, and we're getting another good report today. But again, as Francis mentioned, over a dozen years ago, this was a long time ago, we had 2 years of 0% increases, and then you had over a 21% increase all of a sudden. So we had a surprise. This was a long time ago. We haven't had that in the past, in recent years. But all I'm saying is that we want to make sure that doesn't happen again. And the question is, if we had, more information, accurate information earlier on, we could then tighten up if we have to, before there would be a crisis. And I'm not sure how we could handle it, or, maybe if the Controller's Office doesn't have the manpower for that, is there any models that other communities have done that would enable, where we could contract out, say, with a firm, and then with, say, your firm or another firm, and, would it help us? Or is this something that maybe is an impractical idea?
It's probably a little impractical because, as the controller said, obviously the books are closed monthly,
Right.
but I would deem them like a soft close, to move into the next month. So they're not sitting there every month making sure every accounts payable got in there. At the end of the year, that is happening. But on a monthly basis, it's not happening. And as also was said, the budget is an annual budget, right? So let's say you're talking like a departmental revenue like parks, right? And maybe you budget, I'm just making up a number, $1 million for parks revenue. Well, we probably know most of the parks revenue is going to come in the summer, right? It's not coming in the middle of the winter in February. So you might look at a report, she might be able to give you a revenue status report that shows budget and actual at the end of February. And you're going to see $1 million for parks revenue, and you're going to see zero actual, and you're going to be like, why is our revenue zero? So that's where it's somewhat impractical, unless you had like a monthly, budget and said, hey, the parks revenue is really going to come in from June to September.
No, there's just some people who
yeah.
keep asking me, and so I wanted to, get your thoughts on this way I could report back.
Yeah.
I know
Yeah,
there
so-
are things that we can't anticipate. For instance, we all know that state budget's taken a big hit, and, they're going to pass costs on to us.
But that's
Right?
a perfect example
Yeah.
where if we had more periodic reports and said, we know we're going to get less state aid, and that's going to cost us $1 million, and we knew that
But
in August.
those things are so hard to anticipate, is and the only way we can have any kind of sense, it's just like when you invest monies, that it might go like this, but the trajectory might be.
No, I understand. Well,
So even with grants, we don't know when we're going to get that reimbursement.
no, I understand. But, no, I'm satisfied with your answer.
I have a quick question. I have had the fantastic opportunity to meet close, maybe 8,000 people here in the town over the past, since February, because I'm out and about talking with people. And the loudest outcry is coming from residents about the taxes, the rising, increasing taxes here in the town of Greenburgh. I mean, people are really hurting in this town. And my question is there a way of generating, additional revenue without hurting the taxpayers, hitting them so hard with tax increases, like property increases, like property tax increases. Like next year, we're due for another assessment by Tyler Technologies. And residents are just really scared that their taxes are going to go up exponentially again from that assessment.
Well, assessment is separate from
Okay.
revenues, and,
Okay.
so assessment theoretically is supposed to make everybody pay a fair share. That's what it's supposed to do. So if there are two houses in the town of Greenburgh, and they were both assessed at the same value, and the town had to raise $100 in taxes to support its operations, each house would pay $50 in taxes. But now, if all of a sudden the first house puts in, a swimming pool and a third floor and this and that, now all of a sudden, if their assessments stay the same, the idea for the assessment is that it's supposed to be at market value. So now, if all of a sudden that person doubled the value of their house, their assessment might be, not 50 anymore, it might be 150, right? 100 for this house, 50. But the town may still need to raise $100 in taxes the next year. But now, that first house will now have to pay 2/3 of that tax, and the other person would pay 1/3.
But we're getting, first of all, most of the tax complaints have nothing to do with the town because we've reduced the taxes. But the thing is,
I hear a lot of
right, but
complaints.
people are complaining about the entire tax package, and most of it's the schools, and it's really the schools that are the problem. But in terms of additional revenues, we're going to be getting more revenues from the Elmwood, that's not in the 2000, that was not in the 2022 analysis. Brightview is going to start the construction. Garrett, Duquesne applied for a grant that the town board basically approved last week, saying we want to take a look at the Four Corners in Hartsdale. So that's economic development. There's a lot of empty, there's office parks on 119 that potentially could be, redeveloped. So I think that at least for the next 5-10 years, there's a lot of potential additional revenue, streams, so.
Yeah, and besides, and to go back to the school taxes represent about 65% of the budget, roughly 15, 18%
Actually, I was going to
county,
say,
15,
for the numbers
18%
we
town.
talked about earlier, the taxes that the town collects, the real property taxes, this year it was $73 million. We saw that other page for the taxes that you're collecting for the schools and the other and the county is $520 million.
Right.
So you have a $600 million tax collection pot, and the town portion is $75 million of the $600 million. So it's just really over 10%, 12%
Right.
of the total tax bill that a house would pay.
Right, so, but the point also that I'm making, the county tax is about the same, right? Maybe a couple percentage points more, I don't know. But the bulk of the taxes are school taxes, and we have a vote. Every year, there's a vote on the school taxes to approve taxes. And this year, for instance, the number of voters that turned out in Greenburgh was so paltry. Fewer voters voted on the school taxes in the town of Greenburgh than voted in the village of Hastings. We're talking about unincorporated at about 46,000 people, and Hastings at 8,000 people. So, it's something that you might say is that, look closely at the school taxes, and maybe they're justified, and you are concerned about your kids' education. So, but at least understand where the taxes are and how much we as a town can impact the amount of monies that are coming out of their pockets. It costs X amount of dollars to run the town has to collect that amount of money, and they collect that portion, as well as the school.
Well, thank you for your time.
You're welcome. Thank you.
Okay.
Thank you.
Thanks.
Enjoy the festivities here this evening.
Thanks.
Thank you.
Okay.
We got a nice turnout.
Yeah, we were facing
You want
this
to close the meeting
Yeah,
out?
we'll close the meeting. And,
Second? Aye.
yeah,
Go ahead, close the meeting.
no, you could,
You
anybody.
can jump in. Everybody can go in.
Yeah, anybody could get a free hamburger.
I don't know who seconded.
I seconded
Benefits.
it.
Ellen seconded,
Taxes, right?
okay, all right.
And we all said aye. Say aye. Say
Aye.
Aye.
All right, thank you.
Okay.
All right, thank you.
My apologies.
You're welcome.